time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So we'll get into this. Apple just reported last week. I want to go through the results and just take a look at the company and the outlook going forward. So Apple is the largest company in the world at a market cap of 2.7 trillion, beating out the second largest company, Microsoft. And interesting to note, about 60% of Apple's revenue comes from outside of North and South America. So in what they refer to as their international markets. They reported their fiscal Q2s on May 4th, a nice move up in the stock price after the company reported. They beat on earnings per share. They reported $1.52, beating by 9 cents, and they beat on revenue as well, 94.9 billion, beating by about $2 billion. So this has been the case with the mega cap tech companies, including Microsoft, Alphabet, Meta, and Amazon. They all beat analyst expectations when they reported the week before Apple in the current earnings season. Now, I tend not to focus too much on analyst expectations because, whether or not it's relevant that a company beat expectations or fell short of them really depends upon how good those expectations were to begin with. So it's very easy to game the system by being overly conservative and then saying, okay, they beat, so that's a positive sign. It's really relative here, but in any event, all of the major mega cap tech companies beat analyst expectations in this earnings season. Now we'll take a look at the financial results from Apple, just as on a nominal basis, or just essentially as they were, not in the context of what analysts were saying. Net sales were actually down about 2.5%. So the company saw a 4.5% drop in product revenue for the quarter, but a 5.5% increase in service revenue. Operating income was down about 5.5%, and diluted EPS, although it beat analyst expectations and we saw a nice move in the stock, diluted EPS was flat at $1.52. We can break that down by geography as well. In the Americas, revenue was down 7.6%, up 2.8% in Europe, down in China, down in Japan. But rest of Asia outside of China and Japan was up 15% to $8.1 billion. And then if we look at this by product breakdown as well, iPhone is the company's largest product, up 1.5% to $51.3 billion. Mac was down 31%, iPad down almost 13%. And then, of course, net sales in total down 2.5%. So although the iPhone was only up 1.5%, it's by far their largest product category. The iPhone accounts for about 54% of total sales, at least it did in Q2. The second largest component is services at about 22%. So looking at how the market share of the iPhone has been over the last several years here, we can see that Apple has been growing their market share quite significantly over the past couple of years, essentially since 2019. So right now, according to Counterpoint Research, the iPhone has about an 18% share of the smartphone market globally. So this is up from 17%. This was as of the end of 2022, 18% up from 17% in 2021, from 15% in 2020, and then 13% in 2019. Now, the company's peak market cap or market share, mind you, was in 2011, 2012, which was about 18%. So they're right now, after declining from 2012 to 2018, they now have 3 consecutive years of growing market share, which is a good sign. And then some takeaways from the conference call and from the results. The company did increase its dividend 4%. The board has authorized a $90 billion share repurchase. And what they want to do is they have about $58 billion in net cash per share right now. And what they want to do is they have a goal of getting net cash neutral over time. So they want to return that net cash out to investors in the form of buybacks and in the form of dividends. Now, looking forward into the next quarter, the fiscal Q3, they expect their year-over-year revenue performance to be rather similar to what they did in the most recent quarter. So, largely flat, maybe down a little bit. This assumes that the macroeconomic outlook doesn't worsen from here. They also expect foreign exchange to continue to be a headwind, and overall a negative year-over-year impact due to the high level, the 60% of the revenue that's from outside of American markets. The company mentioned the key growth drivers for Apple are momentum in emerging markets and also growth in paid subscriptions. So we saw that in the product breakdown in the quarter. If you looked at rest of Asia, it's only about $8 billion of total revenue, but it was up 15%. So that was a net positive there in those emerging markets. There are also other areas, though, where Apple says that the macroeconomic environment is negatively impacting growth. And this is in the digital advertising and mobile gaming market, which we would expect right now. They did talk a little bit about AI as well, just mentioning that they've been integrating AI into their products and their features for many years. A lot of these are very important features that help protect people's safety, like fall detection, crash detection. So on a valuation basis, if we're going to look at the analyst expectations for the current year, the consensus is about $5.95 in earnings per share. That would be a year-over-year decline of about 2.6%, so say flat. And then at the current share price of $173, you're looking at a P ratio of 29 times. So what is our take? Well, we like Apple. We think it's a strong company long term. It has a very competitive moat. It's been growing its market share in the iPhone space for many years. We will say it is primarily a consumer products company. Most people think of Apple as a tech company, and of course it is a major mega cap technology company, but it does follow a consumer products cycle. So that means larger swings in financial performance relative to software SaaS companies that have a lot of recurring revenue. So our next steps, we're just going to continue to monitor. We have no near-term expectations about purchasing Apple. We have a couple other recommendations in the mega cap tech space that we prefer. I wouldn't argue with somebody who wanted to own Apple. I'm certainly not going to argue with Warren Buffett about it. He knows the company well. But certainly there are some other names that we prefer over Apple right now.
Good. So do you guys all own iPhones?
Yes.
I do.
I do not.
Oh,
No,
Yeah.
bro, you have an
is
Android?
dissenting.
Yeah, got a
What
Samsung.
phone?
That doesn't
Oh,
surprise
okay.
me about Brett.
I had an Android years ago. I went iPhone, Android, and then back to iPhone. And, I can think of things that I don't like about both. I just find the iPhone is just, it's more convenient. The Androids can kind of be like having a little mini computer in your pocket. You have to worry a little bit more about them in terms of, data privacy and those things. But so, yeah, that's why I have the iPhone.
They're very, like, iPhones are so user friendly. And I understand now, like, as having debates and conversations with people, who had like the Samsung, what is it, Galaxy S4, all the way up to whatever it is, the platform's very similar. Each new phone that you get. But that is something that I loved about Apple is, my first iPod that I basically got, 12 years ago, however long ago it was, is basically the exact same, upgraded features, but it's very, very similar, just very user friendly. So I do like that. One thing about Apple as well, and it's going to be kind of interesting to see how the market takes to it, but from my understanding, they're coming out with a new augmented reality and VR or virtual reality headset. And this is going to be the first new product line that they're kind of getting into, in, I believe, several years since the watch was actually released. So, it's going to be interesting to see how the market, takes to it. I'm not thinking that it's going to, boost Apple's revenue to, crazy numbers or anything. I think it's still going to cost about $3,000 per headset, but it is going to be interesting seeing them
And does
as
the
a player.
headset run on its own, or do you need to?
I'm not sure. I would have to do more research into
It
it,
sounds
but I just know that
price point that it would run independent
think.
of the computer.
Yeah,
Which would be interesting.
for sure.
Yeah, I
Yeah,
mean, virtual
do you
reality,
guys-
that seems to be a segment that everybody talks about, but it's just never really taken off, right? I remember 25 years ago trying VR, out and thinking that, oh, this is great, it's gonna be big, and it kind of disappeared. Then more recently with Oculus Rift, people said, okay,
Sony's
this
got a
is
good
it,
one.
like the technology's there now. But I don't know many people that use it a lot. I know a few people that have the headsets, but
Yeah, I
it's
own
just
one.
not something that seems to have developed that addictive use where people just want to use it all the time.
Yeah, I agree.
So you guys,
And
I'm gonna ask you what was the PE guesses on Apple in 2013? Around the average and its
It
low.
was cheaper
It's
then. I think it was like
yeah.
12 or something like that. Yeah, no, I
I'd say
remember.
What
around
do you
20,
guys think? What do you guys
25
think,
times,
I'm gonna
25.
say 12 times.
Brett?
I'd say
I'm putting you
20.
guys in the spot. So like its low was around in the range of 9, and it was up to about 10 or 12 in that range.
Yeah.
So
Yeah,
how
like
about how
every
about
year
in
it traded at a discount.
2016? So 3 years later.
20 times, 25, somewhere in there.
Aaron, any guess? This is 3
Close to
years
what it
later.
is now,
Yeah,
pretty
this
close.
is hard. I'm putting you guys on the spot.
No,
I,
like
I
it.
think
This
he's
is fun.
tricking
I
us,
I
and
say
it's
30 times.
it's gonna be way up, and it's gonna be like 40 just because he has a game going on here.
No. It's still basically 10.
Oh, okay.
Still basically 10. So it did go up in like 2014 to 15 to 17 in that range, but down around to the 10 to
So what
12
did it
range.
peak up then in like 2014, 2015?
Well, I mean, it even had it came back down to the 12 range in 2019, right? But it started to really run up about 2019, like midway through the year. Came down, obviously, at the pandemic, and then really ran up after 2020.
So
And
that
you
makes
hit a
sense
range
if
of
you look at the
40. It
market
hit
share.
40. Yeah.
Yeah, if you look at the market share of the iPhone, that makes sense because I was surprised because I remember it used to always trade at what was a fairly low valuation.
Yeah.
Then it went way up. So that must have been around like that 2014 timeframe. But market share of the iPhone had already started coming down then. But it's since 2019 that it started to grow its market share at a pretty good rate. So it does make sense then that
Yeah, it's crazy to see, like, it was not thought of as, it was really being priced as a consumer electronics company with significant risk that that there could be a substitute at any point, or people would think, oh, the iPhone's not cool anymore, let's not use it. But it's not really that type of business anymore, but it's certainly gotten a significant premium. So Warren Buffett got all the sales increase, all the EPS increase, the share buybacks, and he got a massive multiple re-rating from when he bought and that's how you get an incredibly powerful run in a stock. You get a multiple re-rating. The outlook on the company completely changes from the analyst community, from anybody who's investing in it, and you have sales and EPS growth and share buybacks, and that's how you had a tremendous run in this stock. So it's really interesting to see where it was and where it is today and how it's thought of, and the premium that it gets today versus that was a significant discount to the market that it was getting 10 plus years ago. And even when I said 2016, it's we're talking about just 8 years ago, right? In that range.